Thanks. Appreciate the intro. It's a pretty stacked panel, a lot of people. Hopefully we can get through all the questions. But I prepared some questions for each of you, but I'd like you guys to start off by introducing yourself. So Scott, why don't we start with you and then move along?
Sure. Hi, everybody. Thanks for having me today, and thanks for hosting. Scott Sigel. I am the CEO of the Helium Foundation. Helium is a new means to build wireless networks around the world.
Hey, I'm Chris. I'm head of Credora DeFi Risk Ratings and Redstone. Redstone is an Oracle and data provider for all DeFi infrastructure, and Credora is essentially DeFi Risk Ratings. So think like Moody's, S&P, and Fitch for DeFi.
Hi, everyone. Daniel Reis-Faria. I'm CEO of ZeroStack. We're the publicly traded vehicle on NASDAQ that is stacking more zero-G.
Hey, my name is Bill Qian. I come to this region for 4 years. Collectively with the Phoenix Group, we built up the first ever sovereign Bitcoin miner in the downtown of Abu Dhabi, 700 million, with a sovereign wealth fund HSC back to 2022. So basically, right now, all the UAE sovereign Bitcoin reserve is under the custody of our group. In 2023, we become the first ever crypto public company in this region, Phoenix Group. And I look after the whole capital allocation and the investments. Collectively, we manage 2 billion balance sheet and 200 million net profit by 2024. And before, I worked for CZ as a global head of finance, managed the global 20 billion assets for finance. And welcome to UAE.
I'm Janet Adams. I'm the Chief Operating Officer of SingularityNET. I'm a board member of the Artificial Superintelligence Alliance, and I'm co-CEO and co-founder of Zarka Technologies, which is an exciting AI enterprise neural symbolic AI technology provider based here in the UAE, in Abu Dhabi and Dubai.
Awesome.
Thanks.
And I'll quickly, I'm Seg. I'm from Sonic. I'm the head of AI at Sonic. So Sonic is the layer 1 blockchain. Previously known as Phantom. But what I'm focused on is building a full stack sort of natural language to Web3 application builder called Spawn. So that's the major project that I'm working on. Cool. So let's start with, I'm going to ask each of the panelists a couple of questions, and then we're going to go into group questions. So why don't we start with Scott? First question is, how do you pitch DeepIn to traditional infrastructure investors?
Yeah, so hate starting with acronyms, so let's talk about what those things actually mean. So DeepIn, for those who are not familiar, decentralized physical infrastructure networks. So you think about traditional utility networks, things like wireless networks, compute networks, energy generation distribution. These things are all very high capital intensive networks that have been traditionally been very, very centralized. So you're talking about the high capital expenditure to build those networks. You're thinking about the operational overhead around those networks. You're thinking about how do you actually think about the geographic and specific niche needs of each of those networks? And what DeepIn is doing is it's accelerating both on the capital side and the deployment side that's not necessarily operator specific. So what we're doing with Helium is we're thinking about a new way to actually build those types of networks. So traditionally, again, you think about mobile towers, the cost of those towers, the real estate, the maintenance of the radios involved with those towers. We're really effectively crowdsourced that. The same way that's happening in wireless and compute and data networks. This is what we're doing with Helium. And it's a problem that is confronting a very traditional legacy problem. So not only are we solving a problem for the traditional enterprise around how do you propagate more wireless coverage? How do you expand that footprint around the world? How do you think about adding redundancy and resiliency? So not even necessarily creating coverage areas where there are none, but areas where you need that redundancy. So think about indoor, large transportation areas, arenas, shopping centers, where there traditionally has not been sufficient or adequate coverage. High traffic zones where you have spikes, think about like Ubers and kind of rideshare programs. You need to be able to adjust dynamically with changing demand. And that's what DeepIn really solves for, is it is solving the footprint for the legacy industry. It is helping to think about that demand in terms of where you have spikes in usage. How are you covering underserved rural areas, underserved economic areas, where the deployment is really happening at the edge to solve those problems where it doesn't just benefit that legacy carriers and the legacy operators, but it opens the door for new challengers. And that's exactly what we're doing with Helium. So we're working with several existing legacy telcos right now to help expand their coverage footprint, as well as building our own carrier and our own service where we're pumping through, what are we at right now? I think something in terms of 50 terabytes daily, 2 million active users don't even necessarily see or know. And I think that's one of the big things that as you think about bringing the economic value of crypto-powered networks to the masses, you want to abstract away a lot of the complexities of those crypto networks. And that's where DePIN really shines, is you're talking about a physical asset that's cash flow generating, that's used by traditional utility networks, where mostly the mass adoption and users don't have to see and understand that it exists to actually get that economic benefit. So I think that's kind of high level, but happy to get into more of that in discussion.
Okay, one thing popped up for me there. What would you say concretely is the killer use case or the best use case you found for your network so far?
Yeah, so for Helium specifically, I would say for us, really, really specific, it's that indoor coverage problem. That is an issue for telecoms and carriers around the world where they have put up large towers and they're covering supply zones, they're covering large urban areas. But once you start to get into those places I mentioned around arenas,
Right.
transportation centers, shopping malls, how do you make sure that coverage can handle the density of foot traffic? How do you make sure the data needs? Even when you think about a lot of those sensor networks indoors that are matching for air quality or flood detection, all these things, our needs around data consumption are only going up, and they continue to go up, beyond a linear rate at this point. So for a community-powered network such as Helium to work with those existing telcos, where we're satisfying the demand from the legacy side, but also being able to actually build our own carrier to offer something at lower cost, in a way that most consumers can comprehend and use the network, I think that really has been our killer use case, and that's why we're seeing the growth that we are.
That makes sense. I think, yeah, so this leads into sort of the next question I was going to ask is, how are telcos seeing you with respect to competition? Do they see you as a threat? It seems like you're working with them to some degree. So,
Yeah, I mean, I would say that right now we're almost a necessity for a lot of telco, and that's why we have so many pilots that are running around the world. Obviously, we're a U.S.-based organization. That's where we're having most of our growth right now through our own carrier. But we have pilots going in UK, EU, South America, South Korea. And it's because, again, telcos have a scaling problem. This is fairly universal for most places around the world where they can't exploit their footprint fast enough or add enough redundancy for all of that mass volume of data consumption needs. So right now they look at us mostly as a partner where, again, you think about that larger carrier infrastructure married with a crypto network powered infrastructure. Those two things are how you get to that wireless coverage ubiquity where you can have something that's more cost effective. So they look at us mostly right now as a partner and as a necessity. So we're seeing a lot of the pickup in demand, but at the same time, what we're building opens up the space for new challengers, new mobile carriers that can operate in a way that's so much more cost effective and that can be passed along to users. And that's what we're doing with our Helium mobile carrier in the US, where we're seeing a lot of success there. But right now, we're really solving a very fundamental problem at a global level for telcos.
it's interesting. So Helium's been around a long time. I think when I first conceived of it, I thought they would be sort of direct competition to the more centralized telcos, et cetera. And I think that we see this in the crypto space generally. It's like it seems like it's not as head-to-head as we initially might have thought. Sort of decentralization would be. Decentralization, it's become sort of a collaborative thing. So, for example, institutions are now adopting decentralized crypto assets via ETFs and things like this. So I think that it's interesting that we're going through sort of a collaboration phase, and then potentially that opens the door to some competition down the road. But yeah, that's I think sort of a soft way to get in.
Yeah, I think the framing really matters here in terms of the fact of like what really is that kind of larger enterprise scaling problem that's being faced. And again, just looking at telco as a specific example, the average spend on a lot of the capex spend on a yearly basis is usually $10 to $20 billion a year from large telcos. So they're looking to offload those costs. They're looking for new partners, and that's exactly one of the ways that I think we're succeeding as the leading DePIN in the space.
Nice, 100%. Sounds good. Janet, I want to go to you next. So you're from SingularityNET. So you're building and correct me if I'm wrong, a decentralized AI marketplace. And how does that compete with centralized players like OpenAI who have these sort of widgets and these other things?
Yeah, thanks, Seg. So how many of you here work for institutions? or organizations who want to implement AI? Audience question? One. Competing with OpenAI on an AI basis is not really something we even are bothered about, because what OpenAI does and what ChatGPT does and what all the LLMs do is it's just so limited in its capability. I know it seems extremely powerful in its ability to do one thing, and if you use it right for one thing, whether it's OpenAI or Claude or any of the large language models or large models, it seems very good at that one thing. But there was a MIT report published last week or the week before, which stated that 90% of organizations surveyed have deployed AI in their organizations. 95% of those who have deployed AI in their organizations are reporting little or no return on investment from their deployment. So we're in this position where there's a lot of talk about AI bubble, AI hype, and that's related to this mass market sweep to adopt large language models in organizations as part of an AI strategy, and it's simply not yielding the returns. What we're building at SingularityNET with our open, decentralized marketplace, but also with the Artificial Superintelligence Alliance and our ASI Create platform, our agent-first platform, is agentic AI frameworks that utilize a range of AI, not just large language models, not just deep neural networks, but the full sweep, evolutionary programming, logical reasoning, the full sweep of AI, and actually enable completion of complex processes, whether they're financial processes. My own background is from financial services, commercial and investment banking mostly. But so the AI we're bringing is vastly more powerful and has an awful lot more potential than a simple old large language model, which is just not fulfilling what people think it can do right now today.
Yeah, and I think the report that you cited is super interesting to me, because I feel like for the last 3 years personally, I've just been doing sort of organizational AI, internal sort of process optimization using AI. I think a lot of the problem is that the implementation of the systems that exist is the way that the systems are being used to sort of optimize processes is very shallow.
Yes.
And also the knowledge that's required to be able to implement these things
Yes.
properly doesn't exist in sort of a four-year university degree, really, because it's so cutting edge that you have to sort of be an entrepreneur to be able to sort of implement these new things and be curious and all this kind of thing. But it's only been a short time frame where these things have existed for people to actually learn how to implement processes correctly. So yeah, it's super interesting that you're trying to look at the the sort of domain from a holistic perspective rather than just apply chatbot to optimize emails or something.
Well,
right?
exactly, and even Copilot and these email optimizers, they're yielding like 3% productivity increase across. And you hit the nail on the head, Seg, about doing shallow edge sort of implementations. The organizations that are achieving ROI from their AI implementations are the ones who look at their entire operating model, who look at their entire industry sector, who look at how are we going to reimagine ourselves in the age of AI, and how are we going to reimagine everybody's job, because almost all jobs change. Not all jobs will be eradicated by AI, but certainly almost all jobs will change to a very, very large degree. And so starting from, we work with neural symbolic AI, and we've got the world's most advanced knowledge graph, hypergraph, metagraph. And by working with knowledge systems across multiple legacy systems and databases, we can integrate information sources, and we can really start, a total reimagination of the industry as we enter Web 4.
Oh, very interesting. So my next question then would be, what does decentralized AGI, I've seen that term, actually mean for institutional investors?
So who here knows what AGI is? Right. Artificial general intelligence is the next wave of AI, and it's different to today's LLMs, which are narrow AI. It's an AI that can learn in one context and apply what it's learned to another context. It can reason. It can be genuinely creative. It can find solutions that are not in its training data set, because all of today's deep neural network-based AIs, neural AIs, are just based on your data set. So they're statistical, and they just reproduce what's in the data set. So AGI is a much broader, much more intelligent AI, and it's really important that it's decentralized. So by developing decentralized AGI, in the first place, we have a real chance of winning and breaking down the monopoly of big tech on our data, on our implementations, on our productivity, who largely produce AI tools for the top 1% of earners. It's going to be radically and dramatically transformational. This is a time where the decentralized movement, which up till now has been more promise than actual, although $4 trillion is no mean feat as a total market cap for the market. But AGI is going to absolutely fundamentally change everything. And so for institutional investors, you need to consider, how do I use these tools? How do I stay in touch with these tools as they're developing? And how are these tools going to dramatically affect the stocks, the shareholding, the distribution of wealth, particularly across technology, which is what, 30, 40% of the global economy now at this point.
Okay, and then where does compute infrastructure need to go to support decentralized AI at scale?
Well, this is a super exciting point, thank you. So privacy and confidentiality is what decentralized compute needs next, and security. So we're seeing in Web 2, we're seeing the traditional hyperscalers, we're seeing companies like Land Rover and Marks and Spencer's get like giant cybersecurity attacks. Security is an issue in traditional technology, but we've cracked it much better, certainly with our ASI chain, which we've just released in DevNet. We have unparalleled security. We have security, and we are working, I'm very excited that with SingularityNET, we're working very close with AlphaTon to implement compute for the new Telegram Cocoon AI infrastructure, and that is focused on confidentiality and privacy, because in a world where our children are going to be chatting to robots and telling them all their deepest secrets, confidentiality and data privacy and security is paramount, and that's where we need to go. And really happy to say, together with my co-CEO Sergey Shalyapin here, who's CTO of SingularityNET, we're pioneering the use of decentralized compute with confidential compute built in. So the confidentiality, the privacy, and the security, thanks to our fabulous partners at AlphaTon.
Yeah, I mean, security, I think, is a big piece of it, and data privacy, because obviously with these large language models and other AI tools, you usually cannot operate on obfuscated data. They need to see the data in plain text, but that also means the processing is being done on a server that is controlled by some entity, probably, that you don't want the data to be exposed to. And so confidential compute and these things are very important, I think, going forward. So that's definitely good that you're making that a priority.
Thank you. And just to finish, tie back to my first point, that's how we compete with OpenAI, because they simply take and use all our data right now. And when we're locking our data down, they can't use it all to build their large language models.
Yeah, definitely. Amazing. I want to go to Chris Wong next. So you're from Redstone and Credora. Just to clarify, are they two different organizations?
Yeah, for sure. So roughly 3 months ago, Redstone acquired Credora. The reason being, Redstone already provides a lot of the data and the price feeds for different crypto assets on, many chains, many different type of assets. So Credora, again, is these DeFi risk ratings, and there's a huge need right now, specifically in DeFi, for risk transparency. I mean, given what happened with Stream and its XUSD asset, Elixir, and some of these other stablecoins that have depegged, there's just a huge need for this risk transparency. It's really hard for you to calculate a risk and reward calculation if you only know, at best, half of the equation. Like, you understand the APY is how much yield you're earning in percentage terms, and you can see how much yield you're earning. But on the risk side, at most, I'd say most people only understand 10 to 20% of it. And institutions specifically have very deep and complex technical requirements to have some sort of risk analysis in order to actually allocate a large number of funds to DeFi.
Okay, that makes sense. So that leads into my question about how are these risk ratings going to bring more institutional investors into sort of the DeFi space?
Yeah, for sure. So I mean, the first thing is that the institutions simply just require better risk analysis, and they need to understand essentially the downside of their capital allocation. They need to understand where the underlying risk is. So the different risk factors that we're looking at, for example, is like smart contract risk, like peg tracker or peg track, like collateral risk, custodian risk. And so a lot of these different risks are essentially being aggregated into our risk methodology. And we're producing a very similar TradFi-like rating. So like Moody's, Fitch, and S&P usually do like AAA, so like AAA plus or AAA minus, all the way down to D. We've simplified that to be basically A plus all the way down to D minus. A being pretty safe, and D being junk that you probably shouldn't touch and is likely going to blow up with significant loss. So the alpha here is that we already rated 15 Morpho vaults. So that's live. The announcement's going out tomorrow, so you get a little bit of the early alpha. So we rated vaults from like large risk curators such as like Gauntlet, Steakhouse, Yearn, and some other ones. But really, it's just about onboarding that next wave of institutional adoption that really need deeper risk analytics.
Okay, interesting. So I guess it's sort of a combination, just from a developer's perspective, it's sort of your assessment is a combination of factors that you consider, right? So there's, I guess, more meta risk, which is like the chain risk, and then there's the actual contract risk based on how well the contract is audited, and then there's other types of. Is this how you like? Could you describe some of the variables you use?
Yeah, for sure. So there's definitely many variables to the methodology, and basically what we're doing is we're assigning specific scores and what we call PD, or like probability of default or probability scores, and so just to name a couple, so like smart contract, like custodian, like how much funds are being held in custodian. For example, if one project has 100% of their custodian funds in Coinbase or Copper or wherever, that is at an elevated risk. If that, for example, centralized exchange has any sort of problem, liquidity risk. Let's say there's not enough liquidity on the token. It would be very easy to manipulate that token with large trades or wash trades. There's also risk on like the operations side. So for example, if there's a curator on like Morpho, like Gauntlet or other ones, and they're running like riskier strategies, or maybe it's a new curator that doesn't have as much reputation as some of these larger vault curators, then that will lower the score a bit. So it really just boils down to several factors. Another one is also like assets. So in a vault, let's say there's 10 assets. We are essentially rating all of the underlying assets in order to understand the overall profile of like a vault.
Okay, interesting. Out of personal curiosity, what is your opinion on the fact that a lot of the Bitcoin supply that's tied up in ETFs right now is held with a few large custodians? Is that a systemic risk to the Bitcoin ecosystem, or just a person?
I mean, it could be a potential. MicroStrategy specifically has a lot of Bitcoin, and they continue to buy. I mean, their NAV, I believe, right now is is under 1.
No, it's not. It's 1.1.
Yeah, I think 2 weeks ago it was slightly below 1. But yeah, it's definitely obviously a potential risk if one single custodian or party holds a large amount of an asset. I mean, that's always just that's an elevated risk.
I think institutions are just used to sort of centralized custody with sort of one major name or major custodian. The decentralization and the security provided by it is not baked into the ethos of TradFi, right? So then
Correct.
You potentially expose DeFi to these risks by this sort of meeting of the two worlds. It's just something I've been thinking about and
For sure.
thought it might be relevant. Okay, cool. I think that gives us a good overview of what you guys are doing. Super interesting. And I think, yeah, risk pricing, these types of things are missing from the ecosystem. So that's really cool that you're working on that. I want to go over to Daniel. So Daniel, you are with ZeroStack. And could you just give a little refresher? It's been a little while since the intros.
Well, I'm going to start probably by saying that this was probably the most fun year to be in the crypto space in a really long time, because we've actually changed everything again. And I started evaluating opportunities in the public markets back in April, and an opportunity to work with treasury companies at the time and to build the first one came to my desk, and I said, yes, let's go. So we put together DeFi Dev Corp. And DeFi Dev Corp was the first Solana publicly traded company in the US, listed on NASDAQ. And what it really did at the time is it sent almost like a shattering earthquake throughout the space, where suddenly every retail investor that held shares in the vehicle, which was called Janover at the time, was suddenly getting buys and buys and buys and buys, and they wouldn't even understand how a company that had a market cap of $6 million could exponentially grow to $1 billion in such a short span of time. So as I was involved in this and I really was inspired by it, I started seeing what other areas and where could a vision of crypto align with the public markets and with traditional finance, and also blend in the hottest, highest growth topic on the planet, which is AI. And that was how ZeroStack was born. So ZeroStack is the first of many kinds, but it's the first of many kinds for a multitude of reasons. So the asset that's back that ZeroStack does treasury for is a token called ZeroG, Zero Gravity Labs. For those of you that might not have heard of ZeroG, ZeroG is the largest L1 network for AI, decentralized AI, essentially modular, scalable, 100 times cheaper, 10 times faster than any other solution on the market. And I became a maxi on this idea of how am I going to buy more ZeroG and how am I going to make ZeroG relevant. And the relevance of ZeroG actually became more and more important over the last month and a half when we started seeing Oracle, OpenAI, and NVIDIA openly looping revenue on the market. And we suddenly can position ourselves as pretty much the short against them. So what is ZeroG? What is ZeroStack, and how are we structured? So we did something that no one else had done before, and we did it successfully, which was we actually took the token public on NASDAQ before the token generation event had happened. And this was done in tandem with 3 very complex listings. We did the Binance listing, the Coinbase listing, and the Kraken listing on the same day that we took it public. Needless to say, all these exchanges were excellent partners. And the company did a pipe 1 at the time, with the token being valued at around $3. On the first day, the token went from $3 to $16. It was an absolute, once again, another, twice this year, I have seen the chart go up and I wasn't even sure like what was happening. But from our perspective, we are really proud of what we achieved, and we want to continue to support buying more of this token and ultimately making it the AI standard for the AI.
Great. If you could describe how the actual infrastructure of ZeroStack works, like how can I, for example, if I want to use some of these resources, go and use it? How would a user interact?
Okay, so there's a couple things here. We need to separate what ZeroStack is and what the network does. ZeroStack, we're the publicly traded vehicle, and our goal is to provide our shareholders better accumulation strategies and give them higher yield than they would normally get by just buying the token on their own. And in order to do that, we are different from, for example, if you compare us to MicroStrategy, we're a completely different asset class, even though we're still a DAT in that sense, but we're not necessarily just a DAT. And the reason is that the Zero-G network, in and of its own, generates yield. And while Bitcoin does not generate any yield, Zero-G will actually pay as dividends and by staking the token. So part of that staking revenue will generate one other thing, which a lot of the current DATs that are on the market can't do, because for example, if you can't stake Bitcoin, it's not going to get you paid anything for it. But if that's why MicroStrategy has products like Strife, STRC, etc. So in our case, what we're going to do is we're going to be able to stake, generate that yield, report that yield to the market, which is going to make our shareholders happy, and that on the same time we can actually do credit products as well, and those credit products are going to be structured in such a way that are backed by that yield. And by doing that, we can run the flywheel, continuously acquire Zero-G, and then put not just return also value for the token holders, but building on to the staking yield and our revenue. So it's kind of a different strategy, and it blends into the modularity of the network and the fact that the network can be used in many different use cases. But I don't want to go too deep into the network. But for asset managers, she already, Janet mentioned already privacy, security, modularity, all those things. So Zero-G essentially is the railways to run LLMs, is the railways for you to come and implement a lot of your distributed AI computing needs.
Okay, great. I do have some more questions around that, but I think it'll probably run over time. So great, thanks for that. I'll move on to Bill Qian. Bill, if you could intro just really quickly again, very quickly, what you do, because it's been a while since the intro.
Me and my team, we're the largest Bitcoin miner in Middle East. So collectively, we manage around 4% of the computing power still so far. And by 2022, our track record is build up the first sovereign Bitcoin miner for Abu Dhabi central government, which is on the opposite of the Rosewood Hotel, 250 megawatts. By then, it is the largest standalone Bitcoin miner in the world. So in 2023, we brought our mining company Phoenix to the IPO, and right now, we still manage A is Bitcoin mining, B is the crypto investments. So those two. And during my spare time, I'm also a active content generator with 300,000 followers. From the YouTube, I do the crypto and AI podcast with all the entrepreneurs from Asia, US, etc.
Great. So just about Cypher, you've backed Solana, Sui, Ton, correct me if I'm wrong. What do you look for in infrastructure bets versus application layer bets?
Sure, yeah. So I think this is a very generic thesis I want to share to everyone. In past 100 years, there are 28,000 US public companies being ever listed. And right now, if we calculate the shareholder value creation, 72 companies contribute 50% of the value creation. 966 listed companies contribute 100% of all the published shareholder value creation. Means the rest of the company, which is around 27,000 companies, the listed company, the net of the shareholder value creation is zero. So basically, power law is so extreme, even it go to the listed company zone. Before, we always believe, the venture capital is applied to the power law. But actually, in the public market, the power law still apply. But why I want to share this example is because, in crypto industry, the power law is another level. Right now, around the global crypto industry, we have 4 trillion market cap token, 4 trillion. But there are, 28 million token ever created, 28 million. Because, tokenization is a liberal thing for everyone. Everyone can issue a token. There's no limit. It's not like, going to the NASDAQ. You have to, do hard work. But among those tokens, Bitcoin still contributes 63%. So Bitcoin, the weight in the crypto is way larger than NVIDIA in equity. And that, come to the echo to the thesis, why we bet heavily into Solana and Sui, in this season. Solana, my cost is $34, lower than most of the Wall Street players. They get into the auction. And Sui, I am the only one venture backer from Middle East as well. The reason is because we do see, infrastructure of the crypto is something like, how you can pick a AWS or Azure for the Web2. And it's going to be very concentrated. So we do believe, like those very single bet will be, sort of the AWS or Visa for the Web3. Nevertheless, I understand there are many, niche chain, layer one, etc. And of course, there will be very phenomenal latecomer like 0G as well. But I think, my point of view would be, in the end of the day, only the outlier, only the power law will, constitute most of the return and value.
Very interesting. Great. And then why, and this will lead into some of the group questions, but I want to ask you, why is the UAE becoming the hub for crypto capital? And what does that mean for global investment flows?
Yeah, when I come to UAE back to 4 years ago, it's kind of, soft exile. Why I want to say that thing? Because, before I live in Beijing and managed Binance Global Investments, and I was not allowed to stay in China anymore. And when we talk about soft exile, where shall we go? Singapore become very harsh to crypto innovator. And in the end, most of the Binance people, we moved to this region. But still today, we saw a great news, the ADGM is going to regulate Binance global side. It's not Binance ADGM, it's Binance.com, which is a, very important news because, in that sense, ADGM has become the largest crypto regulator in terms of the volume they are monitoring. Because the SEC only monitoring the Coinbase volume, which is, only a fraction of the Binance. So I want to say, this region, it become a sort of a balance, artist of the balance between yin and yang. The yang means like, you want to prompt, you want to, sort of support the innovation. Yin means like, you want to be a sophisticated regulator without sacrifice the quality of the regulation. And I do think, this region has played very well, to how to balance this because, even Binance, before Binance, get the clear of the, the law issue, etc. Still Binance team, they live there and they, speak with the regulator here as well. Yeah, I think, that's one most important thing, like in all the global regulator, all the global jurisdiction policymakers, they have to learn from this region.
Yeah, no, I think I agree. The sort of neutrality and sort of the open for business mindset that the country has really benefited it, I think. Okay, and then I'll ask a question for anyone in the group who wants to answer. I think this is sort of really pertinent for the day. Is AI sucking capital from blockchain infra, or are they converging, or is it a nuanced situation? Anyone who wants to take the question.
I can take first.
Yeah.
So I think, AI is something, you're going to redo every supply side of the human beings' civilization, from agriculture, education, everything. And that's why, we come to see AI is redo every single sector. And we're going to see, thousands of unicorn in the future. Why? It's because, let's say, there are 100 sectors. And every sector, you have like 10 value chain, which can be, enabled by AI. So it's going to be 100 times 10 equal to 1,000 unicorn in the future. Having said that, crypto is on the other side. Crypto only have five sectors to enable, which is cash, equity, bonds, real estate, and maybe, the other alternative. And that's why, most of the crypto we see is on the asset side. And it is sort of like, redo every single sector of the global 900 trillion wealth. But on top of that, convergence is definitely something I will see in the very near future because, AI needs some permissionless, automated layer 1 or layer 2 to, do the settlement. And for the data layer, for the communication layer, for the, the value layer as well. And also, the crypto industry, in the end, it's just like, one of the single industry, like you will be enabled by the AI by default. Think about like, Binance, etc. A lot of, their coding, a lot of their customer service has been enabled by AI by default. Yeah. So I think in the end of the day, my advice to everyone's personal, asset allocation would be you have to own the AI ETF and Bitcoin, together.
Yeah. No, that's a really interesting perspective. Sort of like crypto has been and has sort of formed the role of sort of an asset class more so than a living, although it is a living, breathing ecosystem, but for a lot of people, it's just a buy an asset and forget it as an investment type of thing. And then on the AI front, it's sort of like enabling live services and things like that, where, for example, customer service probably going to change. It's going to change a lot. UX is one place where I personally think AI, at least in the crypto sphere, is underused. Enabling better UX for people who are not as technical, etc. And I'm talking about specifically the LLM piece, not necessarily AI as a whole. But yeah, I think looking at it like that is one way to look at it. Yeah, go ahead.
Thanks very much. So I'd go a step further. Totally loved your contributions, Bill. Thank you. I'd go a step further and I'd say AI is going to make crypto, because we're entering into Web 4. And if we think of Web 3 as being where we introduced programmable transactions online, Web 4 is going to be where we automate that. So in Web 4, we'll have automated intelligence transacting, and with the advanced privacy and security and trustless blockchain capabilities, Web 4 is really going to take off on crypto, because agents and AI can transact and interact with each other on our ASI chain. They can do this asynchronously. Our nodes can communicate asynchronously. And so what we're going to see through the Web 4 AI revolution is an awful lot more institutional focus and funding, global funding, pouring into crypto, because crypto is where the AI agents are going to be able to independently and autonomously transact, both not just processing stages and processing steps, but actual financial transactions safely.
Yes, safely. Very interesting. Okay, so we have a very little amount of time left. What I'm going to ask each of you to do is answer a question in 30 seconds, if possible. What should an asset manager remember about infra investing walking out of this room? So maybe another way to phrase it is, what is the most important trend from your perspectives to look at in the next maybe 1 year or so?
I guess look at me. I guess to start with me.
Sure.
So I think that, yeah, I mean, I would kind of very quickly say that in terms of the next kind of like $1 trillion opportunity from the infrastructure perspective is like, it's all going to be installed at the edge. Where is data needed? Where is connectivity needed? Where is compute needed? And I think what, if I kind of bring the conversation back around a deep end, it's also very, very relevant to AI, is where do you actually need these compute networks? Where you need that connectivity? All this is going to be happening at the edge. And the idea that you can increase that global participation through a crypto-powered network is only to increase our ability to actually leverage these networks, use them appropriately, have value accruing much more broadly. And I think that's one of the most important things to consider around DeepIn as a specific subsector of crypto and what those networks enable for AI, for edge compute, for that kind of layer of connectivity. So I think really where you see infrastructure at the edge being an important wave of where capital is going to flow to is going to only continue to increase at this point.
Nice. Janet?
In under 30 seconds, I'm going to say AI agentic frameworks operating on decentralized confidential compute, utilizing a blockchain infrastructure for trustless, highly secure, highly private, highly scalable transactions.
SingularityNET. Cool.
SingularityNET. Thank you.
Christopher?
Yeah, I would just say, investing in infrastructure and just Web3 in general is just a different ballgame than TradFi. There are a lot of underlying risks that are not as obvious or apparent and easy to understand. So I think just understanding the underlying risks is really going to be, and downside potential is also going to be something that institutions need to understand before they start actually allocating sizable amounts of capital into DeFi.
Great. Daniel?
Yeah, well, I think there's always two things that if you focus on what you want to actually have in your treasury bag, I think the obvious Bitcoin and two major other asset classes like a Solana or an Ethereum. And then I personally am extremely bullish on shorting this whole AI frenzy. And the reason why I'm doing that is because 0G is essentially the antithesis to all of this frivolous spending on compute. So essentially shorting like this current mechanism that's in play. And we are a great platform to do that.
Great. Bill?
I think next 5 years, we're still gonna have 8 billion population, but we're gonna have more than 800 billion AI agents and robots in next 3 years, regardless it's the digital or physical one. So that's my prediction of the AI. For the crypto, I think right now we have 5 billion internet user, but 99% of them, even they use Google, they won't be able to buy Google stock. Because Google stock buy is so sort of high end. You have to go to the KYC of the US, etc. But I think by the development of the RWA, everything on chain, in the very near future, 5 billion Google and internet user will be able to own and buy Google stock anytime.
Nice. Very interesting. Great. Thank you all. This has been a super
Seg.
super interesting
Seg.
panel for me personally. So thanks for all the info. And yeah, let's wrap it here. Thank you.
Thank you.
Thank you.
audience. Thank you. Panel.